Greetings traders, today I'm going to show you something of interest. The problem with technical analysis or pattern recognition and trading the news is identical. You're trying to time the market, which some say is an impossible task. And it is if you rely on the mystical patterns that book peddlers and pundits have provided us over the years, stochastics, MACD, a whole litany of various average-based indicators, and they are all mathematically average-based. Averages, as any statistician will tell you, do not supply any predictive capacity. Indeed, a trend can and typically does reverse the minute we recognise it. Buying high and selling low is what a lot of people are destined to do. Today we're going to reverse that and introduce real patterns any market makes and how to trade them in discrete daily segments, like a day job, so you can catch the main move and close your laptop for the day. There's nothing simpler than this, and when you get a grasp on it, you'll start carving out some ridiculous daily returns that can of course lead to a compounded fortune over the coming months. But here's one provision: it's hard. Psychologically it's very hard, and I don't recommend you follow the Reynolds model with real money initially. It takes training yourself to leave your trade alone. So begin with a demo account, eh? So here it is, and tell me in the comments if this doesn't sound crazy common sense to you. We can look at any market and identify the day's beginning, the Asian session. Our goal in the Reynolds method is to identify the direction of the day's range, and it's as simple as that. Can you imagine taking the full measure of the daily range every day? That's what I do. If we break it down, we can see that most, not all, but most days in this chart has a range of 2,000 pips minimum. The Dow is really moving these days, and I like it. You can verify that simply by looking at a daily chart and comparing all the bars to realise that the 2,000 pips at least is possible. We don't need 2,000, but that is likely the range unless conditions change drastically at some point. Otherwise you're fairly safe, and you'll understand when it has changed. What this means is that we immediately know where to put our take profit from our entry point, right? That's kind of exciting, right? We reverse engineer a successful trade. Correct? The second glaringly obvious observation is that typically the shape of the move is sideways, then up, or sideways and then down. Nothing can be simpler than this. So that's just the two options that are available, that are there every day. You can see it in the charts every single day. There are of course days when you don't get that, but the most common is a sideways move with a literal lift or drop at around the Euro session, where the move of the day begins. So all we are looking to do is identify, is it going up today or is it going down today? And as we already know, we will get a 2,000 pip range. So we know where to set the TP. You can literally flip a coin and be right 50% of the time, right? Well, not really. It depends on your entry point and how much stop loss space you have. Nevertheless, I'm pointing out how simple the Reynolds model is and how all the nonsense is left out just by following it. We're purely looking at the price action. Nothing can be simpler than this, because we've eradicated all the unpleasant confusion and identified what the price typically does on a daily basis and nothing more. This already should be getting you geared up, and there's lots more to come as we identify how to trade false breakouts during the Asian session and identify the true breakout later in the day. The Reynolds model will supply you with a bird's eye view of any market and give you the training to deliver yourself and your family an incredible income in Forex for decades to come. Please like and share and spread the word to your trading friends to see more about the Reynolds model. For now, I'll bid you good day, and no luck required, eh?